G'day folks, welcome back to Pizza Investing. It's the 13th of June 2024. This is a special request by one of the subscribers. I want to look at Broadcom and also Coco. Now before you go and invest in any of these, we just need to do some due diligence, and one of the things you look at for shares such as Broadcom, you have to look at the dividend history. Does it pay a dividend in case the price goes against you? Just be wary as well with shares especially. The market's probably overheated at the moment, and we might see a correction sometime, and a lot of the indicators are showing a potential reversal, so just be careful about putting too much into buying shares. Coco, on the other hand, you can buy that during the intraday. It's more of a speculative stock for a commodity at least, so let's look at some strategy in terms of how to trade it. So first couple of things, apart from the shares paying a dividend, you need to look at the when you're trading on the daily, for example, for in this case Broadcom, we're going to be looking at the weekly time frame as a minimum. So placing your trades on the daily time frame, or if you're trading on the lower time frames like the 1 hour, 2 hour, etc., such as in the case possibly for Coco, you look at the very minimum on the daily trend before placing any trades. Step 2, you look at the CCI 150. For a fresh breakout from the moving averages. That always gives you a bit more, I suppose, better probability of success rather than sort of catching it once it's risen outside of that moving average range. So wait for a fresh breakout to enter the trade. And lastly, close the trade when the CCI or even the price falls back into the moving averages. And I'll go through these examples on how to use those in each of these instruments. So looking at Broadcom first, in terms of if it does pay a dividend, we go to Yahoo Finance if your broker doesn't show you, but your broker should show you the dividend history as well. But as a free source, you can go to Yahoo Finance, and you can see here for Broadcom, the ticker code is AVGO, and it went ex-dividend on the 20th of March 2024, and the yield was 1.4%. So this pays a small dividend, but a dividend nonetheless. And we look at that in case the price goes against us when we're looking at buying and selling. So if you want to buy it and put it in your bottom drawer, and if you're happy with 1.4%, that's fine. Or if you're looking at buying and selling in a short term, we're going to show you how to enter and exit the trade. So again, looking at Broadcom, and we're going to use the same format as what I do in my daily videos. So we look at the monthly, the weekly, and the and the daily charts. So looking at the monthly first off, you can see the CCI 150 is trending above the moving average range. It's been doing that since almost the start of 2023, so it's been quite bullish, but has it run out of steam? Now on the weekly, you'll notice we've got a bearish divergence happening. So again, I'd be very cautious about this one. We had a couple of retraces to the downside here, very small retraces, and another one went sideways here for a number of weeks. And we're still in a divergence, so that's a bit of a cautionary sign. On the daily as well, notice the CCI is dropping as compared to the price. We're getting lower highs versus higher highs on the price. That's also a warning sign. So having said that, divergence sometimes fail, and as long as the price keeps rising, then the CCI keeps rising, and that can invalidate the divergence if we wish to, well, if you have some prayers happening that way. But notice as well, it's paying a dividend here. Had a dividend payment back in the 21st of March, and another one here on the 19th of December. Now you'll notice as well here, the prices on the daily, the price is broken up past the 1445 level, and that was our previous resistance, and so far no current sign of resistance above that has appeared yet. So again, the only warning sign I'd suggest and to be cautionary of is this bearish divergence. Now if we go to the hourly chart, and I've got here the daily chart as a reference, if you follow my videos, you'll understand why. We only go in the direction of the CCI. So this one gives you a clearer picture of any potential divergence happening. And again, you'll notice there's lower highs on the CCI versus higher highs on the price. So this can keep rising, of course, as long as that CCI keeps rising and breaks higher than that high, then it's going to invalidate that divergence. That's a bit of a risk you've got to be aware of. I personally wouldn't be buying this one. It's probably a bit overheated. I'd like to see this without any divergence to be more confident. But especially, as I said in my opening comments, preferably you want to go long on the daily, for example, when you're trading this on a daily time frame. So going back to the monthly, weekly and daily charts. So you can see here, for example, when the price breaks above on the weekly, that's when you'd also take those long positions on the daily. So if you go back to, that was the November 23, that was during that little period there, November 23, that area there coincided with that break above on the weekly, and you would have gained a few points. And then you close it when it breaks below the exponential moving average 9, or when the CCI breaks into that moving average band. So you would have gained a few points in that little trade there. Again, the CCI fell in on the weekly as well. Then it broke above again on that candle there, which coincided with this period back here. You could have traded this, but again, that would have been a bit of a risk. Actually, no. So there, you could have traded that one there as well. That broke above on the moving averages of the price chart, but also above on the CCI, and that would have been a nice little gain. And again, you close it out when the CCI breaks into that moving average range, so you would have closed it out near the top there. Now, since then, the prices, again, notice the weekly is declining, so you'd be very cautious about going long on the daily in this case. But again, you could have gone long on that one there, and again, closed it out on that one there. So you would have gained a few points in that little trade. Now, in this case, the daily is also dropping off. There's no other opportunities shown up there. The price keeps rising, but the CCI keeps dropping. So just, again, that's a risky trade to take when the CCI is dropping and the price is rising, because we don't know when it's going to turn back. Now, in this case, it did fall back a bit at that point. But again, I'd like to wait to see the CCI on the weekly break higher before taking any long trades on the daily. And again, if you want to trade on the daily alone, you can see here, wait for it to break above. It broke above there, and you close it out when it breaks in that CCI zone there. So you would have closed it out near the top there as well. Let's keep going. And currently, if you still wanted to trade this, ideally you would have bought it back there when it closed above on the CCI there, on that candle, and you'd still be in a trade today. So again, that's what I mean. You want to get it when it's a fresh breakout, and avoid jumping in, because if you jump in, say you bought it up here, for example, on that candle at the peak, then it fell back and you would have potentially closed it out with a stop loss, and you would have been in a losing position. You want to get it when it has a fresh breakout, like on that candle or that candle there, fresh breakout on the CCI, fresh breakout on the price as well, and you want to get that movement to the upside. Next, we look at cocoa, London cocoa futures. So again, there's no indicator for the CCI in this case on the monthly chart, although you can see there it's quite bullish. On the weekly, it's broken to the downside of that CCI, so it's a bit of a bearish outlook at the moment, although the CCI is rising into that moving average range, which will give us a neutral positioning if it does that. And on the daily, it did fall off a bit, but notice it's actually broken above on that one there. So you could have gone long on that one. If you're trading, again, I'd like to trade in a direction of the weekly. So if you're going long here, I would have taken long positions during that period there and avoid going long until we see this break above the moving average range on the weekly. But again, if you want to trade alone on the daily, it's a bit of a risky trade, but you could still do it during that period. And again, very minimal gains at the moment. But again, if you've gone long, you'd still be in a trade today. Now, if you jump to the hourly charts, and if you're trading the cocoa on the hourly time frame, taking long positions only based on the daily trend. So again, when the CCI breaks above on the moving averages, you take long positions on this is the hourly chart. You can do the same thing for a 2 hourly or a 15 minute or 4 hourly, whatever suits your strategy trading style. So again, going long during this period when the CCI is above, on the daily and the CCI is above on the hourly, taking long positions and close it out when it enters into that moving average range. So you buy it around here somewhere and close it out there. You don't go long yet. You might have had a false break there, but notice it's very volatile. It's going sideways. So you might have had a couple of stop losses there, or if you want to hold on to it, as long as it's going sideways, it's still in the trade. It's going up. The price is still rising. So again, a bit of a risky trade, but you can actually use the CCIs and the moving averages of the price as indicators to get in and out of the trade. But ideally, you want to make sure that they're both aligned, both the price CCI, the price moving averages, and the CCI moving averages are moving in your direction if you're going, in this case, going long. Now, in terms of both of these indicators, the price moving averages and the CCI moving averages, they're both in the description below should you wish to watch that video and learn how to draw those on your charting software. So hopefully you got value out of that video. Hit that like and subscribe button. Feel free to provide any comments, any suggestions for future share reviews, and I'll see you in the next video. Thanks for watching.